know exactly where you stand. Like, what do you think silver is going, both in terms of price and in terms of value? And if you could also just support that with some reasoning, that'd be very helpful to talk to you.
Yeah, absolutely. And, I'm always cautious and reluctant to talk about these super high silver targets because I like to be very rational and logical with my price targets and my analysis. But I'll just say right off the bat, I don't think that is too far out in left field at all from a long-term perspective. Now, I think silver has an intermediate term target of closer to $50. So let's get there first. But over the longer term, I like to say $300. And I think that's pretty conservative. But to go back, I might have got a little bit ahead of myself there. Here's what got me into this thesis in the first place is the U.S. government and really all governments around the world have two choices. The debt and the unfunded contingent liabilities that they have are mathematically impossible to repay in today's dollars. It's just math. That cannot happen. So they have two choices. They can either inflate that debt away or they can default honestly. So those are their two choices. And history shows that 100% of the time, they never default honestly. They're going to opt to inflate that debt away because the populace doesn't understand it and it deflects the blame away from them. So we're headed for a currency crisis. That's just a mathematical fact, in my opinion. That leads you down to, okay, well, how do I invest and how do I position for this? And throughout, all of history, really 6,000 years of history, silver and gold have been the primary beneficiaries of this exact kind of fiscal and monetary recklessness. And these cycles just repeat over and over throughout history. You can go back to Rome, you can go back to Greece and Athens, and we're seeing that right now on a global scale. So I think silver stands to benefit the most in this environment. So, back to your original question, I guess, is $600 silver crazy? I don't think so, not in the fullness of time. And if you go back to 1980 and look at the $50 silver price in 1980 on an inflation-adjusted basis, yeah, it is several $100s. But, I'm not saying we go there tomorrow or anything like that. Let's first get to $50 first.
Exactly. Yeah, that's something that I guess that was the second point that I wanted to get to, because, when you talk about these prices, I'm instantly thinking about probability, like how probable are they? Like I get the value of silver, maybe like even $1,000, depending on what you call value. So in certain circumstances, I guess silver could get to $1,000 in value. But do you think that it's likely for the price of silver to ever catch up with its value?
To answer that question, let's define the price first. When most people talk about the silver price, we're talking about the price of paper contracts, the supply and demand set for paper contracts that's set on the commodities exchange, the COMEX. So from my perspective, that's an artificial price. And we see that right now, like the spot price is around almost $27, 26 and change. But if you want to go get your hand on a Silver Eagle, you're going to pay $34, $35. So what's the price of silver? Is it 26 or 35? So that's the difference between the paper price and the real price. And, I think in the fullness of time, it's going to be the physical price that matters and that fully asserts itself. But right now we're in the paper paradigm, and that could lead us into the silver squeeze movement, which is, I think, accelerating the end of that kind of paper paradigm where the price is set in these fraudulent paper markets.
I'm thinking, like, when are those prices really going to happen? Because, as you mentioned, I'll be very happy with $50 silver in 3 years. So what is what is your timeline on silver going forward?
So as far as like shorter term price predictions, I mean, that's a tough game to play, but we'll have some fun. Whenever gold makes a new all-time high, like it did in 2020, silver always follows and makes a new all-time high. That's just what happens. So when that happens, I think it's reasonable to expect possibly here in 2021. That's not my baseline scenario, but I think 2022 would be a very reasonable target to hit $50 silver in the next, call it 12 to 18 months. It could very well happen much sooner than that. But from a longer term time horizon, I have a $300 price target on silver around 2026. And again, not being sensational or trying to make these wild claims, but that's just based on the average of the previous two bull markets. So in the 1970s, if you average that bull market with 1999 to 2011, those returns, that was an average 10-year bull market, and that yields roughly $300 silver.
Wow. Okay. Yeah, I very much appreciate you supporting this by the math. It's good that you're saying it like that. And now this hits me much better to be able to talk to you going forward. And as a beginner, though, I'm not able to keep up, as I told you off mic, I'm not able to keep up as in depth with all of my investments as as you do with silver. Right now, I have my main focus on uranium, which I also mentioned, but like, I basically know my thesis on silver, right? I always check the surface to see if anything's really changed, to see if I should maybe move money from silver equity to gold equity, or from uranium equity to silver equity, and all that. I use, for example, a gold to silver ratio, but I'd say that that's about all that I do. So the first thing that I really want to dive in here today, figure out is what is happening with silver in 2021 below the surface, like in terms of, we mentioned it, COMEX contracts, supply, demand, manipulations is also something that I want to talk about, and all that. So yeah, Steve, could you please walk me through what you've seen and noticed in the silver market so far in 2021 that you think I, as a beginner, might have missed?
Sure. So two things. You've got the fundamentals and the technicals. I focus on the macro fundamentals, and then I'm also a technical analyst. So I rely heavily on price and volume in the charts. So it's very interesting that in 2020, and I got this from Steve San Angelo, he shows data that retail demand actually exceeded industrial demand for silver for the first time in, gosh, I can't remember how long, but it's been a very long time that that's ever happened. So retail investment demand for silver is trending higher. And, I think that's a trajectory and a trend that's early in its early stages. So that's one dynamic to watch. However, it's important to note that, if a bunch of us went out and millions of people went out and bought 1 ounce coins today, that's not going to affect the price that we see on our screens. It's the industrial demand. And what I think eventually is going to happen is that when we pit, in the industrial users, General Motors, General Electric, Samsung, Apple, Tesla, all these big companies that use silver in their products, when they sense an actual supply shortage of industrial metal, that you'll be pitting industry against these bankers who manipulate it. And I think that's when we can see some really sharp moves to the upside. And I think, that's in a when question, not an if question. And I think that trend is, clearly going in that direction, that we should look to see that probably next year or so.
Okay, yeah, that sounds very interesting. You mentioned the technicals. I'm an extreme noob when it comes down to technicals. I guess I only use my moving averages, MACD, and my RSI. So what do you use to do that technical analysis? That's interesting.
Yeah, I'm glad you brought that up. And it kind of is a pet peeve of mine that a lot of technicians or technical analysts kind of make it overly complicated. And that may make the technical analysts, appear smarter than they are. But really what I found over time is that simplicity outperforms complexity every time. And simple technical analysis is much more powerful than all these complex things that really don't make sense to the average person. So you mentioned moving averages. I just apply a 50 and a 200-day moving average. Why those two moving averages? Because that's what most institutional trading algorithms look at, especially the 200-day. So I use those, and then just simple like horizontal support and resistance. And it has to be obvious. If it's not obvious to everyone, it probably isn't very significant. And then just some basic chart patterns. I look at triangle patterns, cup and handle, double bottoms, things like that, but nothing complicated. And that outperforms all these complex systems over time.